Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 strong buy stocks, all priced under $20 per share. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Like I said, today we're taking a look at 3 stocks that are all priced under $20 per share and come in with a strong buy consensus from Wall Street Analysts. Plus, they're predicting some double-digit upside potential for all of these companies. So we're going to take a look at what it is that they do and what exactly those analysts are predicting for the stock's future. Just before we get into that, I want to let you know that right now TipRanks is having a 40% off sale premium subscriptions. So if you've been wanting to unlock some fantastic investment research tools, now is a great time to do so. Links will be in the description down below, or you can head over to TipRanks.com. Now let's get right into our 3 strong buy stocks. First on our list today, we're taking a look at Target Hospitality. Their stock trades under the ticker TH and is currently priced at $14.72 per share. Over the past year, they have gained 18%, including 12% over the last 3 months. They also currently score a 10 out of 10 on the TipRanks Smart Score, with increased hedge fund activity and bullish blogger sentiment. Target Hospitality is the U.S.'s largest provider of specialty remote rental accommodations. That is, that they offer workforce lodging, hotels for extended stays, and mobile crew camps. These are used by anything from government agencies to oil, gas, and mining operations to disaster relief operations and large-scale events. Accommodation aside, the company also offers the full spectrum of on-site services such as ongoing maintenance, housekeeping, catering, security, and transportation. They shared their second quarter results on August 9th, and the company had a record-setting second quarter. Earnings per share came in at 44 cents, beating expectations of 37 cents per share. Revenue came in at $143.6 million, which increased 31% year over year. The company acquired strategic humanitarian assets focused on increasing their portfolio capacity to meet the U.S. government's stated and urgent need for additional humanitarian housing solutions, and they established strategic partnership with a world-class government service provider to jointly pursue several new ICF community sites. Management said that their record-setting second quarter results reflected the positive momentum that they've sustained over the past year. Now, Target Hospitality has not attracted a ton of attention from Wall Street. They only have 3 current analyst ratings, but all those analysts do come in with 5 stars and a buy rating on the stock. Their average price target comes in at $19.67, which would be a growth potential of 34% from current prices. Down below, we can see the most recent rating came just 6 days ago from Northland Securities with a pretty optimistic price target and a 56% upside. The others are a couple months old with 15% and 29% upside. The second company on our list today is Kratos Defense. Their stock trades under the ticker KTOS and is currently priced at $14.55 per share. They've seen some notable growth here over the past year, up 39%, fairly flat in the last few months, and coming in with a 9 out of 10 on the TipRanks Smart Score with some pretty notable increased hedge fund activity. Kratos is a defense company that primarily focuses on customers in the U.S. national security sector. This includes the U.S. Navy and Air Force, the Missile Defense Agency, the U.S. Intelligence Community, NASA, and foreign military sales. The company designs and develops a wide range of platforms and products for this customer base, from unmanned aircraft to satellite communication systems, cybersecurity and cyber warfare systems, to hypersonic technology. The company works to change the way that technological breakthroughs are brought to the markets. They shared their second quarter earnings report near the start of August, where they did come out with an earnings beat and reaffirmed their full-year forecasts. Earnings per share came in at 9 cents, beating expectations by 3 cents per share, and for their Q2 revenue, they reported $256.9 million, which increased 14.6% year over year. Their president and CEO said that they have a record backlog and a bid and proposal pipeline of approximately $10 billion, including hypersonic, space, propulsion system, satellite communications, and drone opportunities, with several where multiple Kratos business units are collaborating in a company-wide Kratos cross-divisional pursuit. The Kratos stock currently has 7 analyst ratings, coming in as a strong buy with 6 buys and 1 hold. The average price target for the stock comes in at $17.86. That would be an upside of over 22% for this next year. Down below, once again, we have a lot of 5-star analysts weighing in on the stock, which we love to see. The most recent ratings coming in with this last month are buys with upsides of 30 and 37%. On the low end, we do have a buy rating from a couple months ago at 9.5%, and the others ranging in those mid-teens to low 20s. And the third stock on our list today is Ceco Environmental. Trading under the ticker CECO and priced at $15.92, this is another company that has seen some notable growth. They're up over 73% in the past year and have seen growth of 24% in the last few months. They do score a 10 out of 10 on the TipRanks Smart Score with positive crowd wisdom, increased hedge fund activity, and insiders scooping up shares. Ceco Environmental is focused on going green. They're working on the development and installation of new technologies in environmental air pollution control technologies, energy technologies, and fluid handling and filtration. The company has found customers in sectors and industries as varied as aerospace, automotive, brick making, cement, chemicals, fuel refining, and even glass manufacturing. They've installed more than 32,000 air pollution control systems with the capability to eliminate more than 4.4 billion pounds of pollutants per year. Ceco recently raised their full-year outlook after completing an acquisition. They increased their full-year 2023 outlook to reflect revenues forecasted to be at least $525 million, which would be up approximately 24% year-over-year. This follows their acquisition of Chemco Systems, which is a leader in industrial water recycling and energy conservation solutions. This follows their second quarter earnings report near the start of August, where they had also increased their full-year outlook and came out with some record results. For their Q2, they reported earnings per share of 15 cents, which came in just 1 cent ahead of analyst expectations. But the company did see record orders, revenue, backlog, gross profit, and adjusted EBITDA. Orders of $162.9 million was up 44%, and they had record backlog of $391 million, up 35%. Management said that their second quarter results continue to demonstrate the sustainable growth programs and market leadership positions we've been steadily building over the past few years and bolsters our position as we enter the back half of the year. Their stock has attracted ratings from 5 Wall Street analysts, all coming in with buys. Those unanimous buy ratings come with an average price target of $20.75, which would be a growth potential of 30%, which is pretty impressive considering how much growth the stock has already seen this year. Down below here, we can see the most recent ratings in the last couple of weeks range from an upside of 13% up to 51%, and a couple older ones with 19 and 38% upside. So those are today's 3 strong buy stocks, all priced under $20 per share, and analysts having some pretty bullish outlook on. Let me know your thoughts on these 3 companies in the comments down below. I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock. Please make sure you're always doing your own research and due diligence and sticking to your own investment plan. Thank you guys for watching. I hope you have a great day, and I'll see you back here next time.